any questions, definitely feel free to chime in. I guess one of our important guests that's going to give us perspective on the financial market and also the lending side of things. First, I'll introduce Assad. Hey, Assad.
Hi, Wilson. Thank you. I'm so excited to be here.
And maybe Assad, you can share with us, for those that don't know, where you're from, and also, I guess, loan files, what you're seeing out there, just high level right now.
Yeah, sure. So I'm with US Bank. I'm a mortgage consultant with them. I've been in the industry for over 16 years, and current market is probably the craziest I've seen. It's very competitive. That's the tough side of it. But the positive side for buyers is that interest rates are still at an all-time low. So we're still seeing 30-year fixed rates and high twos. Rates are starting to creep up a little bit, about an eighth to a quarter of a percent compared to an all-time low. The 10-year treasury has been moving up. There's a little bit of volatility there, so that caused the mortgage rates to increase a tad bit, but we're still, in the high twos, which is a great place to be for a 30-year fixed.
Awesome. Which I assume you mentioned 30-year fixed because most consumers are still leveraging that as the most common product, right?
Yeah, it is. I mean, it gives them peace of mind knowing that the rate is fixed for the life of the loan. There are a couple of other options out there, which we can touch on later, but they're called adjustable rate mortgages. They'll give you a lower interest rate for a shorter duration.
Awesome. Thank you for that quick update. I know we're going to deep dive, and you're probably going to get a fair amount of questions in a little bit. Let's do some team intros as well. Annie's here. She's actually going to be one manning the slides. She's our marketing coordinator. Paniz, you want to make an introduction?
Absolutely. Hi, everyone. Really good to see so many faces and so many new names. I'm Paniz. I am probably the newest member on Wilson's team. I'm really, really excited. I see a couple of familiar names, so hello to everyone. But yes, I'm here to talk to you a little bit more about what I'm seeing out here in the market with working with buyers. And I'm so excited for you guys to learn all the content that we have prepared for you.
Thank you, Paniz. Ashley?
Hello, good afternoon, everyone. My name is Ashley Thornton. I've been on Wilson's team for a few years now, investing in real estate for over a handful. And I'm just excited to share some stories with you guys, as well as what we are seeing in this market and how we've been able to help our clients win their offers and move into their homes during COVID and moving forward. So we're excited to share those stories with you and strategies, and I'll pass it off to Wesley.
Hey there, everybody. This is Wesley Coe. Been with the team now for about 4 years. Excited for you guys to listen in on some of the information we have to share today. And I will be speaking later on about some of the details of the offer process, but I'll hand it back to Wilson now.
Yeah, and we have a couple of other team members here. If you want to make an intro, feel free to do so, and we'll get started.
Hi, my name is Corey. We're actually both ISAs. We started the same day. Killing, you want to tell them more about what we do?
Yes, we started the same day. Ari and I basically, we begin the relationship with the client and the agent, and our duty is just to help out as much as possible, be very communicative with everybody, and share information that we know with everybody. And luckily, Ari and I started the same day, so we're partners in crime. Ari, you want to introduce yourself a little bit more?
Yeah, so coming into this role, I had a background in real estate sales as well as, the legal aspects, because I came from a family of investors themselves. And so being in this role is really exciting because we help families generate wealth through real estate. And so we're excited to see what information you take from this presentation and how you guys implement it in your own life.
Awesome. Thank you, ladies. And Cedric and Brian and Carl and Priscilla, Hamid, all members of the team are here too. Appreciate your presence. And of course, our guests, the most important people here. If you do have any questions, I know we had questions come through on the Eventbrite when you did sign up, but if there's any specific questions that you want to make sure we cover before Q&A, or if you want to put it out there, feel free to just put it in chat. And that way I'll have a couple team members fielding them as we go through the presentation. But welcome. Can anyone believe it's February 24th of 2021, a year ago, right before shutdown? Who would have knew? But welcome to the Home Buying Workshop. Our mission is help families build wealth through real estate. Many of the first milestones typically is that first primary residence. And sometimes as well, the second or the first is going to be an investment property in state, out of state. So you might have heard the market is quite a bit hot no matter where you look. And whether you're thinking about here, out of state, or if you have questions about moving up or moving to a different location, but you have something that you need to sell, we're going to talk as much detail as possible on various topics today. So at least you'll receive something and you'll be able to walk away and just discuss with your family, or if you have specific questions after the presentation, you can always reach out to any of us as well. So we'll go to the second slide. So please stay connected with us. We do post quite a bit of content now that we do have a fair amount of videographer, an editor, and Annie's our person that puts a lot of our captions and everything together. So find our blog on our website, or you can follow us on Facebook, Instagram, and YouTube. We have a couple channels, a couple pages, but most of the time, hopefully you'll find something of value on there. So, and welcome. So just to read off what we have, by attending this workshop, you're taking an important step towards investing in a secure asset, whether you have one already or you're looking for a second, third, 10th. We want to answer questions, and today we're going to really start with how the market is doing. So we'll help you gain a basic understanding of the process and discuss the recent market changes. And of course, it's been almost a full year with COVID here and the pandemic. So how that's affected buyer behavior, seller behavior, supply and demand overall. And of course, as I've said, if you have any questions, please type them in chat. So just some of the topics we'll cover, and then we'll just get into it. So next slide. I've said this before, why invest in a home? All I can think about right now in this marketplace, as competitive as it is opportunity, because interest is low. There's still no new homes. There's a lack of inventory, as always, for the last 10 years of our marketplace. If you're here in the peninsula or even on the East Bay, South Bay, there's just so much more land that builders could build on. And there's still a lack of affordable and just your typical housing, single families, purchasable units. There might be quite a bit of construction that you do see across the cities throughout the Bay Area. However, a lot of those are actually not for sale, and they're more so apartment complexes. But if you do see a complex that you're interested in, we're more than happy to do a little bit of back-end research for you and answer some of the questions. So let's talk about the impact of COVID so far. Showings are all based on appointment. Home buyers are still previewing homes in person. That's still a very important step. As much as people start their journey online. So buyers are definitely reconsidering their needs, extra room for an office, a bigger living space if kids are at home, during work hours, having a yard in case you have a pet at home so you don't always have to walk on the street. These are all very important things that people have voiced to us as we help them with their search. Rental prices have dropped. Tenants are, some of them at least, are unable to pay rent, and more people are staying in place or completely moving out of area. As much as you might say and see that there is an exodus from our area, overall, it's still a very strong market. There's still more buyers, and there's multiple of buyers than there are per property that's for sale. So we still anticipate overall, if you guys are curious, this year to be a seller's market. Most home buyers start their search online, photos, videos, virtual tours, Matterport, right before they reach out to, and they have to reach out to an agent at this time to sign off on specific documentation to be able to go tour homes, which we'll dive a little deeper into later. The Bay Area and California housing market remains resilient. It's still very competitive. It started getting competitive, I would say, June of last year, when shelter was lifted, we were deemed essential, and it picked up significantly in November. And we'll dive a little more in that later. Inventory spiked Q3 of last year in September, and then it declined drastically by December. Okay, so we'll give you the big bullet points of timelines of what's happened so far. Of course, March last year, shelter in place started. A lot of ambiguity out there. No one knew what was going to happen. 2 months later, June, showings started to become allowed. The real estate was deemed essential. Showings of occupied homes also continued. So which meant there was a 2-month period where we couldn't show homes that were occupied, which typically make up about 50% more or less of the inventory on the market. And inventory spiked in terms of what was available last year in September. And right now, there's only been a decline and it's been consistently low. So if you look at September 2020 in all of San Mateo County, for example, there is literally 50% or less inventory compared to that time right now. And that started in December into January. And so far, mid to end of month in February, it's still very low inventory. So that's where the market is at. Next, you'll have an update on showing trends. So I know you'll be able to see there's different blues for 2019 and 20. And the most important one that you'll see is the yellow for 2021. So far, we're trending at a faster pace and more showings compared to last year and 2019 respectively. And one thing to note about last year's market right before COVID and shelter in place started was it was a really hot seller's market as well. So to see this trend higher than what it was last year is telling us so far this year is trending to be even more competitive, AKA a strong seller's market compared to the last 2 years. I know what everyone's thinking. What are some strategies we can get our offers accepted if we're looking for a home right now? We're definitely going to cover that during the presentation. The next graph for another update is average days on market in the squiggly or in the bar graph, and in the squiggly line is list to sales price averages. So far, as you can see, ever since May and June of last year when the market started picking up again, it's been on an overall uphill trend for list to sales price becoming stronger, property selling for a little bit more on average ever since that time to now. As you can see, list to sales price almost dropped to 100%, which meant if a property on average listed for 1 million, it sold for $1 million, versus the last 9 years, including the last couple of months, it's a seller's market, which typically things sell above list price. So far in February, your average listing across the area is going for about a little over 103% above its listed price. So next. For sale versus sold. In the red, you'll see month to month inventory available. And you'll also see in the green what actually sells. As you can see, the peak of inventory at 1,259 in this county was September, and it's only gone down from here. So far, December, January, and February of 2020, 21, respectively, and we haven't finished February yet, but inventory is pretty substantially lower than when it peaked. And as you can see, as October, November, December came along, sales were pretty strong in green, where during initial periods and months of COVID, about 50% of listings or less sold. And versus compared to right now, on average, is probably closer to 60, 70, 80% of listings sell. This is something that we pulled from market data from Keller Williams, which was recently shared with me. And I thought this would be helpful for everyone to see. This is showing 19 and 20 data on inventory. And as you can see on average, 20's inventory was a lot less than 19. But even more so, if you were looking at 2021 this year, it's likely starting even lower. This is another months of inventory for your viewpoint ever since 1999. And as you can see, even during COVID 2020 and entering 2021, months of inventory is at record lows for the last 20 plus years, which is pretty insane. Mortgage rates, this just gives you an idea that we've only trended lower ever since 2014. For those that might have been or had family members that purchased back in the 80s, I don't know if you remember, the interest rates were at like 16 to 18%, insane times. Definitely one of the reasons why there's so much competition right now is people are trying to leverage the low interest rates in the last couple of years, as you know. And here's just trend line from 72, which you can see the peak in 81-ish, it was 16%. Historical average for interest rates has been 7.9. Historical average from 1990 to 2020 is 6%, and it's only gone lower. And I think Assad obviously shared that it's gone up in the last, I would say, couple weeks, and he'll share a little more later. Home prices. This gives you a viewpoint as we've gone through the most recent cycle. And what you'll see is home prices went down, obviously, during the financial crisis from 06 to 11, but consistently ever since 12 to 15 and 16 to 20, it's been consistently going up and everything's appreciating. People have said that there might be shadow inventory and there's concerns that there's people in forbearance. This gives you a really good viewpoint from 2008 all the way to right now in terms of potential foreclosures and short sales on the market. It's only trended lower that there's distressed sales. So it gives you some perspective on our markets. And here's the forecast. And this was provided by the research team at the large brokerage. Home sales will increase by 4.6%. Median sales prices will go up by 7%. These are nationwide averages. And months of supply will increase overall very subtly. So not too big of an increase. So overall, what this is saying is the market seems to be very strong for the foreseeable future. And we're feeling it in our local marketplace as well. This is just a reminder of the cycles when there's growth and then also when there's crisis for whatever reason. And typically the growth always has exceeded the momentary crisis. As we know, the real estate market and industry is cyclical. So there's always going to be an expectation that there's going to be growth years and there's going to be years of contraction. So this just gives you an idea. If you want any of these slides, just let us know and we'll share them with you. Market seasonality. So I did some data poll before in our local market. Prices tend to be, from a month-to-month standpoint, highest around Q1 and Q2. And then inventory usually spikes in Q3, specifically September, October for the last 5 years. So if you're looking at purchasing a home or selling a home, seasonality may come into play. I think an even bigger indicator sometimes is going to be available inventory for sale. So even if on average, for example, the market slows down in December, if it was like a December that we just went through when inventory is lower, we're still going to see leaps and bounds in terms of valuation and price growth. We talked about this, so we can skip this. The cost of renting. This is something that usually just motivates me. For those that don't know, I recently purchased my home in November of last year, and I was just visiting this as I visit it on behalf of clients. Depending on how long and if you're currently renting, or even if you've revisit to a time that you were renting, imagine the years that you had paid rent and the value of money has only inflated. So even if you rented, let's say 5 years ago, I mean, we don't have to revisit that if you've owned your home for the last 5 years. I think you've seen the benefit of that. But rent multiplied by each year, 12 months, and how many years you've rented, it's just insane. And that's why we truly believe, if you look at the difference between the net worth of a renter versus a homeowner, the homeowner that has held on to their home or has been able to just gains value from the appreciation of homes that we've seen. So this is just a great reminder. And here's some of the bullet points of buying versus renting, and we can share this with you. Building equity, appreciation, tax breaks on interest, no lease expiration, so you don't have to move. Moving is just not very fun. Predictable monthly mortgage versus if you were renting, obviously rents could increase. Your landlord could decide not to rent to you anymore, depending on where you are. And then you can renovate and really improve your own space, where hopefully it adds to your resale value because it's yours. Obviously, some disadvantages might be a down payment and closing costs. It's more of a long-term commitment, so even more important to talk to an agent to find the right home. And then there's obviously going to be maintenance, wear and tear on a property, and that's pretty typical. So we're not going to go over to renting. Why real estate? Equity buildup, high cash yield, leverage. It's a hard asset. People need to live somewhere, and tax advantages, write-offs. So we can get into the details on it at a later time. So hopefully you guys see the opportunity. We do anticipate the market to continue to go at its course, becoming a stronger and stronger seller's market, or consistently being one. It doesn't mean that, your personal timing is still going to be the most important when you feel financially ready, when you've had those conversations with the important people in your family. And if you do have questions, please let us know. So now we're going to dive into the home buying process. And here's our agents. Some of us are on the call and some of us couldn't make it. Regardless, we're all here with a common goal to help you achieve your real estate dreams, buying a home locally, out of state, out of area, connecting you with a good partner. And as you go through your search, if you have specific questions, we're very responsive. We're here to help. So, and we want to learn about you. As a result of us meeting today, I would love to see questions that you have. I will be revisiting the intake from the Eventbrite, but if there is anything, feel free to just type it in the chat box. And if you have been searching, how's your experience been? That's important to us. We want to know, have you been doing it primarily online? Are you curious about when you start touring properties? Is there anything that happens before you tour properties, such as, do we do a data poll, comparables, disclosures? Do we have conversations with the respective agents that are representing the seller? And we will make sure we do our due diligence to look up material defects to protect your interests. Share with us regarding your current residence and living situation. It's important to know if you have a lease that's coming due that you need to renew. Are you allowed to renew at a shorter term? Those are all important because that might affect how much more you pay out of pocket before you find your home. Painting a picture is kind of like setting a goal for anything. As long as you have clarity on what you're looking for, and even if you don't, we can go on that journey with you to determine what your true needs are for your family. Also, understanding what makes this move important is really important for us. So we really understand other factors that we might not know about or are obvious. And why now versus a year ago or next year? Those are things that we want to give you some perspective on what we anticipate in the market. When would you like to move by, especially if there's other considerations? I know we usually say schools is a big consideration. I think it still is, but because the way that school is conducted, obviously that's kind of changed some of those dynamics on the reasoning. Maybe it's more so having a bigger lot or, specifics about the house or the neighborhood that you're looking for. And those are important for you to share with us. And what does building wealth through real estate mean to you? Because I know what it means for me, and a lot of the team members also know what it means for themselves, because we've seen the impact and the opportunities and the security that it's provided all of us individually. And everyone's journey is a little different. So whether for you personally, you're looking for the first home, it doesn't matter. We want to help you along that journey. And then another question is obviously, what are you looking for in an agent that you choose to work with? It's going to be important for us to know your work style. Do you like being communicated with via text, email, phone call? How quick of a response are you expecting from us? What kind of information are you looking for in each home that might be specific to your search? Those are things that you'll share with us too. And again, all I think about is opportunity, and in this case, the opportunity to help you. Now let's move on to the second portion, getting pre-approved. Assad, maybe you can touch upon the types of pre-approvals and I guess maybe the differences that you see, and I'm sure there's going to be some finance questions for you. Assad, are you there? There we
Sorry
go.
about that. I was on mute. All right, so I'll take over with this slide. Thanks, Wilson. So there are 3 different types of pre-approval letters. So the first one is a pre-qualification letter. Then you have your pre-approval, and finally the conditional underwritten approval. The pre-qualification letter is for those borrowers who are not really looking at to get their credit pulled and or put in a loan application, or also even provide supporting documents like pay stubs and W-2s. So maybe they're kind of in the early phases. They want to know what their budget is and potentially looking to buy in the next 6 months or longer. So for those type of clients, a pre-qualification letter would suffice. We could have a Zoom or a phone call, go through all your data points. I could learn about your employment and your income, your debts, and you can give me an estimate of what your credit score range could be if you use a consumer credit monitoring site like Credit Karma or your credit cards. And based on all those elements, I can get you a pre-qualification letter and let you know how much you could potentially qualify for. So it is a good letter if you're looking to purchase in the next 6 months. But if your time frame is shorter, then the next tier that is a stronger type of letter is a pre-approval letter. And what makes it stronger is that we go to the next level where we would take an actual loan application. I would collect all your supporting documents that I foresee an underwriter would need to issue a formal approval. So your W-2s, your pay stubs, your bank statements, and we would also do a credit check. Therefore, it makes the letter a lot more stronger because everything has been verified, and you would receive a pre-approval letter. One common question I get around this is, how long is my pre-approval letter good for? And the answer to that is 4 months. That's how long your credit report is valid. At the end of 4 months, the credit is going to expire, and for that reason, the pre-approval will, and we would need to run a new credit check. The last tier is your conditional underwritten approval. So an underwriter is the person who actually has signing authority, and they can clear and they can review and clear your conditions. The file will go to an underwriter only if I have a strong commitment from you as a client that you are actively out there looking and making offers, and we can make an exception and do a pre-approval letter on a to be determined property. The reason it's an exception is because of mostly capacity issues. A lot of lenders aren't even offering underwritten approvals. US Bank is one of the few that is right now, but because of capacity, we have a lot of volume with refinances and live purchases. They want to ensure that the client is actually actively out there looking at properties and making offers. And if you are, the bank is willing to take the time to issue you the underwritten approval. And this is going to be the strongest type of approval letter because the underwriter has actually reviewed your conditions and signed off and given you the conditional approval letter. Okay. So moving on to the next slide, what do lenders consider when looking at a borrower and qualifying them? So there's a few different categories, and these combined together are going to determine how much of a mortgage you can qualify for as well, your purchasing power. The first area that we're going to look at is your employment history. So for every borrower, we look for an employment history for 2 years in the same profession. It doesn't have to be in the same employer, but as long as you're employed in the same profession for the most recent 2 years, that covers that category for the requirement around the underwriters for employment. There are some exceptions to the rule. So if you have recently graduated school, whether it's undergrad or graduate school, and you've only been working for a few months, we can use your college education as part of the continuation of employment. And you could have as little as 1 month employment history or less, and you could potentially qualify for a mortgage. In terms of your income, we look at your income before taxes, gross income. And there's different categories on your income that we could take into consideration. We have your base salary, we can use your bonus, and there are restricted stock unit income within a lot of companies here in the Bay Area. So if you have a history of receiving RSU, we can consider that. The higher your total qualifying income is, then the higher your purchasing power could be. The next category is your current debts. So your debt to income ratio is one of the key factors that determines your purchasing power. So your debts that we look at are going to be anything that shows up on your credit report that's a revolving or an installment debt. So for example, credit cards, student loans, auto loans, and whatever the minimum payments are on those items. And with that, we'll also look at what your projected housing payment is going to be on the new property. And then based on your income as well, there's a max debt to income ratio. And that's going to help me do a calculation and let you know what your max purchasing power is, similar to a credit card. So for example, if you have a credit card with a $20,000 high credit limit, I can let you know what your max purchasing power is going to be. And you, of course, don't have to go that high, but at least you know that this is the max you can potentially qualify for. And again, the key factor that determines that is your debt to income ratio. In terms of credit score and credit history, with US Bank, our guidelines are a bit more flexible. Our ceiling on our credit score is 740. So what that means is no matter if your credit score is, let's say, 812 or 740, you'll get our lowest interest rates. And in terms of credit history as well, we have some more flexibility there. We only need one trade line or credit card open for at least 12 months in order to give credit or in order to lend on you. Whereas some other lenders require 2 to 3 different trade lines open with a 12-month history on each one. So that's what the credit history refers to. Moving on to the next category, assets and funds. This is also an area that determines your purchasing power. The assets is going to refer to how much you want to contribute from your portion for the down payment. There are options available with as low as 3.5% down, but those are going to be mostly for conforming mortgages, where the max loan amount in most of the counties in the Bay Area is $822,375. So for those products, again, there are down payment options as low as 3.5% for a primary residence. And if your loan amount goes over the limit I just mentioned, then you're going to fall. Then you're going to have to go into a different category of mortgages, which is the jumbo portfolio. Every bank has both options available. Every bank has a conforming option and a jumbo portfolio. The conforming guidelines are going to be the same with every lender, and then the jumbo portfolio is unique based on each lender's own specific guidelines. Our jumbo products do have a couple of options that go over the conforming limit with down payments as low as 10%. And then besides the money for the down payment, lenders are also going to look for an emergency cushion. That's called a reserve. And the reserve amount that we look for is dependent on your loan size. It could be anywhere from potentially no reserves. There's some conforming products that require no reserves, all the way up to 12 months or 24 months reserves. And when I say reserves, it's referring to whatever your projected housing payment is going to be on the new property you're going to get. So that includes the mortgage, the taxes, the insurance, multiplied by however much reserves is required. So the assets is one of the key areas that sometimes could cause a hiccup or a slowdown. So it's an important part to discuss with your loan officer when you are getting pre-approved. The main potential hiccup is that if there are any large deposits that come into your bank account, every bank is going to want to know where that money came from. And when I say large deposit, I'm referring to anything that's outside of your normal payroll. So for example, if you had gift monies come into your bank account, or if you had let a friend or family member borrow money and they paid you back, these are all items that need to be discussed early on in the process. So you and your loan officer can figure out if those are monies that can actually be accepted by the underwriter. And again, I can't stress it enough. This is probably one of the most important areas to talk to your loan officer, because that's where I see most of the hiccups or delays in the loan process. And when banks look at your assets, we only look at the most recent 2 months. So if you have any large deposits more than 2 months ago, we're not going to look into that. So only the most recent 2 months, 60 days is what we look at from the time that you get into contract. Okay. In terms of what type of accounts we can use your liquid funds, we can use stocks, 401k, retirement. Those are all acceptable sources for down payment or for reserves. And finally, the property appraisal. So the appraisal is done by an independent third party, and they are there to ensure that you as the borrower are protected and the lender is protected in terms of what you're paying for the property. They want to ensure that you're not overpaying for the property. So the appraiser goes out there, does a full inspection of the house, and then they run a comparable search to see if there are homes that have sold that are similar to the subject property over the last 6 months. And that's what they assess to get a value on the subject property. Appraisers are taking a little bit longer right now to turn around. Every market's a little bit different, but that is the appraisal process. If we can please go to the next slide. Okay, so other financing highlights and changes. Down payment requirements, I touched on that briefly. The conforming loans, just to recap, 822,000 approximately or below, there are options with 3.5%. And then on our jumbo product, the max loan amount is $1.25 million for a 10% down payment. So those are the two options available for under 20%. Reserve requirements, we touched on that as well. Employment checks, we touched on that, and bank statements and checks. And I believe we touched on the bank statements as well in terms of making sure that there's no large deposits and to discuss that with your loan officer ahead of time. If we can please go to the next slide.
And
Okay.
for this one, we'll have Ashley walk us through an example of using a mortgage calculator.
Okay, thanks. Thanks, Assad. We've got a bunch of questions for you. So be ready. What we're going to dive into now is what we like to recommend to some of our clients who are curious even before maybe reaching out to Assad. And we recommend they go to just type in Zillow, how much can I afford? And it'll take you to this handy dandy chart here where you can plug in details about what you've got going on. So we started plugging this in we based it on a dual income household, assuming that maybe they've got about 200 annually coming in as far as their income. And then monthly debts, as Assad mentioned, these could be student loans, car loans, those types of things that monthly you're paying on, credit cards, things like that. So we typed in around 350, still driving around in the Sebring out here. So got to count that as a monthly debt. Next is however much you have as a down payment. Some people think it's based on percentages, but I think it's always best to not work on a percentage base, but how much do you actually have liquid? And so we put down 100 here as a good savings. Debt to income, I think Assad might have touched on that a little bit as something that they will take into consideration. If you actually click on the question mark there, it'll explain what debt to income ratio is and what most lenders are looking for. And we usually like to base it around that 36 to 40%. Right now, as Assad mentioned, rates are, if we get in a good groove, if you got a good credit report, we're right around 2.9, 3%, a little over 3, just depending on what you've got going on. And then 360 months is a 30-year fixed. And we've plugged in also there the property taxes, as well as 1.25 would be the property taxes in San Mateo County. And then home insurance, which is required when you're getting financing. We have here, you can see that she's checked the box for include PMI, which is the mortgage insurance, which is required if you have less than the 20%. And so that's been calculated in here. If she unchecks the include PMI, it'll drastically change that price point up at the top. So being able to come in with and avoid that PMI can drastically change your financing. So that's typically why people have this understanding that they need 20%. It's really so that you can afford more. But as Asad mentioned, there are options out there. So we find this to be a fun calculator to play with. If you drag that along, that's actually how much your monthly would be. So if you feel like down at the bottom, you only want to spend around $4,500, then you can figure out based on this chart how much you can afford. But always best to check in with your lender and just figure out what the best fit is for you for the pre-approval as well. So that's just a handy dandy tool to get you started on how much you can afford. And then I think before we get started on the fun part, we've got a lot of questions here for Asad, if you're ready.
Sure. Definitely.
I think this first one, this might be Asad, this might be Wilson, this could be all of us. We wanted to know a little bit more about the benefits of paying for a home in all cash versus with a traditional fixed rate mortgage. Could you go into the pros and cons of that? Wilson, you may see that more than anyone as far as the selling side, I guess, as far as someone maybe coming in with an all cash offer.
Yeah, obviously it has to be all seasoned. I just think about the opportunity cost of using that cash, right? So if I could purchase something $1 million, $1.5 million all cash, that also means that if I qualify for a mortgage, I can purchase multiple properties utilizing that as down payment instead of 100% all cash. So I would consider looking at the opportunity cost, considering how low interest rates are. It's almost like free money in the sense that inflation's going to happen. Inflation's here, right? So I would just look at it based on opportunity costs. If you want to obviously move forward with all cash, you have the ability to do so. Maybe that's the right thing if you're thinking about simplifying and you don't want a mortgage. If you also want to look at other ways that you could leverage that as down payment for multiple purchases, and if it's going to be cash flow positive after expenses, that's another consideration, because the more real estate that you hold, potentially long term, it's going to gain in appreciation in a multiple for you as well. So one of the things I always think about is, aside from my primary residence, do I want to hold on to more real estate? And the answer is absolutely yes. Another thing is there's other vehicles like syndications where you can get a preferred return on the money that you invest. You can get write-offs on losses based on the accelerated depreciation or the cost segregation study that syndicator does. And then also you're going to get some sort of return when they sell that asset, if they project it to be a hold of 3 to 6 years on average, for example. So those are some other things I would think about. But I don't know, Asad, from the lender perspective, if you have other thoughts on that.
Yeah, I can touch a little bit on it. From a competitive standpoint, I'm assuming if a seller sees an all cash offer, it'll probably make it a lot more attractive, because the closing period is going to be shorter and it's cash. They don't have to worry about any financing potential issues. But Wilson touched on some good topic, or some good things around it, where if you leverage that money towards other potential investments, and the rates are so cheap right now, you're missing out on that. With that said, there are some options out there that's called delayed financing. So if you were to purchase a property all cash, you can come back to a lender, and you have to confirm with the lender because every lender has different guidelines around it. But you can go to a lender and apply for delayed financing, which is essentially doing a cash out refinance, and you're replenishing the money that you used to buy the property all cash, and it's treated as a purchase transaction. But one of the caveats is that it has to be done within a certain number of days that you closed escrow. It could be anywhere from 90 to 180 days. And the delayed financing would have to close within 90 to 180 days from the date that you bought the property. So if you're considering doing it to be competitive and purchase a home and then go back and replenish your funds, there is a possibility for you to do that.
Yeah, one last thing, Assad brought up a really good point. You can show all cash on a purchase agreement and have a really long escrow and still get financing. Of course, it's slightly of a bait and switch to get your offer accepted. Personally, I haven't seen that done too much, but that is something that you could do. Or show more down payment in your offer to make it look more attractive, whether you use it or not, or just go up to 20% and save it as reserves the rest. That's something that you could leverage on the offer to potentially get something, maybe entertain your offer as more attractive than someone else that only has 20% or less, for example. So
Wilson's memory is really funny because I actually did that with one of my offers.
Yeah.
It worked out very well. Anyway, Assad, how long is the process to be pre-qualified after submitting the data to you? How long does that pre-qualification, pre-approval process take?
Sure. I mean, if there's a sense of urgency, for example, you saw a property that offers are due within 1 business day, I could potentially prioritize that for you and get it for you right away, the same day or within 24 hours. But if there's not a sense of urgency, I typically like to ask for maybe about 2 to 3 days.
Yeah. Okay. Are there any well-known first-time home buying options right now for first-time home buyers through US Bank, or what do you have on those?
Yeah, I've been getting that question lately a couple of times. I know there are some options out there for down payment assistance programs. Personally, I haven't done any for my clients because just the clients didn't apply for them. But I know there are options available out there. They're going to be typically for the conforming loans up to $822,000, and they'll probably have some criteria for either maximum income amount that you can have, or you have to purchase the property within a certain census tract. So if it's something that you guys would like to explore, I can definitely try to research and look into that for you.
Wonderful. And I know you dove into it a little bit, but how to use FHA 401ks to buy a home?
Yeah, so your 401k or your IRA retirement accounts could be leveraged towards a down payment if you need some liquid funds. So for example, on your 401k, the guidelines generally on that are that you can withdraw up to 50% of the vested balance up to a maximum of $50,000. And you would take that as a loan through the brokerage firm that holds your 401k. And they'll of course charge you a certain percentage of interest on that. My estimate on it is it could be anywhere from like 3.5% to 4.5%. And it's fairly cheap money, and you can leverage that to help you with your down payment. Or maybe let's say you have certain stocks and you don't want to sell your stocks because the market is doing well. So instead of selling your stocks, you leverage your 401k to get some money out that way. And I've also had some clients leverage their IRA accounts or rollover IRA where they sell their securities and they apply that towards a down payment.
Smart. I guess for appraisal environment, you and I kind of talked about it before everyone jumped on. The question is the appraisal environment right now. I guess, what have you seen anything that's kind of stood out as far as appraisals or anything to note?
Yeah, knock on wood, I haven't had any properties not appraised ever since I've been with US Bank, and especially over the last, I guess, 6 to 12 months with the craziness of the market. The appraisers that we use, they're local market appraisers, so they know the market very well. They know what's going on. They do their research to make sure the buyer and the lender are protected, but the properties I've had, they have appraised. we have had more extended turn times just because they're so busy. There's a lot of transactions going on, whether it's purchase and refinance. So certain markets are taking a little bit longer for appraisals to happen. But I guess that's the only change I've seen. There's some delays in terms of getting appraisals back quickly.
Because of the market. Yeah, that makes sense.
Yeah.
Should someone wait to pay off monthly credit card bills before starting the pre-qualification process for your credit score to be at its best?
It definitely does help. If you kind of know ahead of time that you're going to start looking for a property and you want to get pre-approved, maybe in about a month, because that's how long it takes usually for credit cards to report to the credit bureaus, about 3 to 4 weeks. So you could pay down the balances on your credit cards. And as I said, it takes maybe about 3 to 4 weeks for the credit cards to report it to the bureaus. And then once it's reported, then when we run your credit, hopefully it'll be updated and it'll show the lower balances and your scores will go up as well.
Perfect. I think the last one here for now. Are banks checking bank statements at close of escrow period? Like, is it being checked throughout the entire escrow process?
That's a good question. No, it's not throughout the escrow process. It's just one time when we actually need to check it is when you're in contract, when you have an offer accepted. So when you guys apply for a pre-approval with any lender, well, let me just talk about us because I don't know what other lenders require. With me for the pre-approval, I don't want you guys to upload your bank statements into our secure system because once it's uploaded, it's stuck in there for the life of the loan. And if you guys get in contract, let's say 4 months later, then we're going to have to cover the gap from like now through, let's say you get in contract in August. So you have to give me a bunch of statements. So the best way to handle those is just to send the statements directly to me through a secure system that I have. And that way it's not in our underwriters platform. Because the underwriters, all they need are 2-month statements from the time you get in contract. We don't want to give them more in terms of assets when it comes to lending, less is always better. So just keep that in mind.
I lied. There's a few more. How does pre-approval work if you're purchasing a home with someone you don't share a bank account with or aren't legally married? You know, I think you and I have had sisters who purchase a home together, those types of things. How do people do that?
Yeah, that's totally fine. The main thing that underwriters look at is if the property is going to be owner occupied, meaning if both borrowers are going to be living in the property as a primary residence. So if that's the case, then it's totally fine. The relationship doesn't matter. With that said, we do have some options as well for non-occupant co-borrowers. So if anybody ever has a need for that, where if you're trying to qualify on a loan on your own and your income is just not there, then maybe if you have a family member you can add as a non-occupant co-borrower, we can go ahead and do that potentially, depending on the details. And we can use their income to help you qualify for a higher purchasing power.
Perfect. And then can overseas funds be used as reserve or down payment or be counted in the pre-approval process?
Good question. Asset questions are always good to ask early on. So overseas funds would need to hit a US bank account, not a US bank, but your bank account that's in the US in order for it to be used. So the earlier you do that, the better. But they can be used, but they can't be overseas. They have to come to one of your bank accounts that's in the US.
Perfect. I think we'll give Assad a break. We'll dive into the home buying process once you have been pre-approved and you're ready to start the fun part, which is going out there and searching for homes. So here are some things that when we are meeting with our clients that we're trying to decide what's the best fit for you, and some of the considerations in finding a home would be if you're wanting to pick between a condo, a townhome, or a single family home. All of those have their own pros and cons. And location is a huge one. School district, and we'll dive into some websites that can help you figure that out. The size of the home, meaning the square footage of the home and the lot. Layouts, whether or not you are older or have family members that are going to come stay, you may be looking at a ranch style home versus, the tri-level homes, maybe less stairs. Feng shui, some people don't want to be at a T intersection near graveyards, those types of things. These will want to be items that you're going to want to share with your agent who's helping you, so that if they know that stuff, they can point it out to you. Being close to transportation, and as always, backyard for your pets. That's why I purchased my home. And so these are all things that you're going to want to consider when you're meeting with an agent to discuss, so they can help you find the best home for you here in the Bay Area. Some things to note with condos and townhomes: they are going to have an HOA. Those HOAs typically cover the exterior maintenance and the grounds, sometimes the roof, the paint, foundation, those types of things that can sometimes be difficult for first-time home buyers to take on, that type of thing. So we do sometimes recommend that for our first-time home buyers, but single-family homes are great as well, because it allows you a little more space, a little more freedom to update the property and make a lot more of those structural changes that you may want to do for your home. So just some things to consider when looking at properties. And these are some of the tools that our clients have used. We set ours up on Real Scout, which is wonderful because it has an app. We can communicate through it. You can like things, you can message me and say, hey, Ashley, what are the comps on this one? And things like that. Great Schools is where you can go and just type in the address of the home that you're looking for, and it'll give you all of the schools, elementary, middle, and high schools. Trulia, we use a lot for crime maps. If you're interested in finding out what the neighborhood's like and that type of thing, Trulia is a good resource for that. And then Realtor.com, Zillow, and Redfins, those are probably your most popular ones online. Some of them have coming soons. Our Real Scout database also has coming soon. So as long as you're connected with one of the agents and put on Real Scout, you'll also be getting those coming soons that are posted on the MLS as well. But all great resources. I think Zillow and Redfin are best known for having their estimates on what the home may or may not be worth, or its home value. But those are all algorithms. They're not looking inside the home. So you just always want to make sure that you're having an expert look at the recent solds and comparables in the market that you're purchasing in, to make sure that you are competing in this market and coming in at the right price to win the offer. And then I think the next slide might be a little bit about our network. And so this is another strategy that's been really helpful in this competitive market that Wilson said. It is a seller's market, but there are ways that you can still win among those offers. And it's through a little bit of our network. So our role here is to also bring you properties that we find out through being on the top agent network. We're in the top 10% of agents here in the Bay Area. And so what we do is we share those coming soons with each other. We build these relationships because we are one of the prominent teams here in the Bay Area. People want to work with us, and so they'll send us their listings as coming soons. We're always looking out through our database of network to find you those coming soons. And that's been a way that we've been able to help a lot of our clients recently, is getting them in to be the first one to see the house and potentially put in that preemptive offer before anyone else gets to see the home. With those, you usually do have to be pretty competitive and strong, but it's an option. And that's what we're here to help guide you guys through. And then, so for that, once we've discovered what kind of home is important to you, is we're going to start scheduling showings. Now that you're pre-approved, we found the houses that you want to go take a look at. So Panise is going to dive into how showings have maybe changed, because I think back in the day, people would just go to open houses and tour homes at their leisure, and now it's a little bit different. So Panise will walk through how it's different.
Hello, thanks, Ashley. Sorry, I had a little bit of lag from my end, so hopefully you can hear me okay. Yes, so right now what we're seeing in the market is I'm showing on average about 10 properties a week. What we're seeing that's different is that, of course, the process and us having to sign the documents for COVID-related documents, that we're following CDC guidelines and making sure that both the buyers and the sellers and everyone during the process will be safe, is creating a lot of new lines of communication that we did not have before. Typically, we would get a property address and we would schedule that immediately, and we would be able to go see it without even communicating with listing agents. But now there's a lot more communication involved. Luckily, what we're seeing is a lot of listing agents are communicative and they are really responsive, because this is the new opportunity that they have to jump into. That being said, my ask from my clients, which has been really helpful, is that let's make sure that we have enough time to prepare for showings. We no longer can just show up to a property and open the door and go in. There's a little bit more process involved. That being said, because of the supply-demand imbalances that we're seeing in the market, calendars do fill up very quickly. So that's another thing that we're seeing across all of the markets in the Bay Area, that if I get a listing and it's been on the market for 2-3 days, chances are that the calendar that we have access to is filling up really quickly. So again, this is why it's so important to be on top of it and make sure that we are communicating with buyers and listing agents. That being said, there's still a ton of opportunities out there. We are showing properties. I have a lot of buyers that are concerned about COVID, but luckily we haven't had, knock on wood, any issues, and everything is moving forward as business as usual. So it's still a great time to go out there and start shopping and looking for opportunities. So please reach out to us if you have any questions, and if you want to do any showings, we'll be happy to schedule any properties for you to tour.
And one thing to quickly note about that too, because all realtors abide by a code of ethics with realtors. And of course, throughout the whole year, we've experienced other people's listings and just listings in general that someone notifies that someone that went through the property during the tour has had COVID or has COVID. So one of the things that listing agents are required to do is to clean and to notify. So typically communication is pretty quick, but it's nothing to really deter from accomplishing a goal. Especially, I think it's so many people are still out there and they're touring, but we will take every precaution. Listing agents typically have PPE equipment on standby. Tours are scheduled 15 to 30 minute increments apart from each other to make sure that everyone is safe. And if it's an occupied home, of course, the owner, no other parties are going to be in the property at the same time. So cool.
Yeah. So now once you find that home that you've rated 8, 9, 10, you're like, Wesley, we got to put in an offer. It's time to write an offer. So we'll dive into that process now. Oh, or Wilson. Sorry. Wilson, I think you're going to walk us through making an offer.
All right, let's do it. So I see many offers. We just reviewed offers yesterday on a property we listed. We received 8, and I'll tell you the pros and cons and what we look for. But on the buy side, first is the purchase price and the down payment. As we've kind of talked about strategy earlier, if you have more down payment to show because your proof of funds is strong, we can absolutely show it on a contract, but typically it's going to be 20% plus or minus that we do see. Earnest money deposit is going to be typically 3% because liquidated damages, which you don't have to worry about, shows up on the contract. That means if anything goes wrong, the maximum anyone could pursue is 3%. So that's why the earnest money typically in our area is also 3%. Proof of funds we kind of talked about. That's just verifying that you do have the reserves and also the down payment to fulfill the purchase, as much as your offer is accompanied with a pre-approval. Sometimes sellers will ask for proof of, let's say, a bank statement or your investment accounts. We typically block out the address, the account number, but we'll show your name and then the funds. There's 3 different types of contingencies on an offer, and that's loan, appraisal, and inspection. In a competitive environment like we see here, these are definitely going to be things that you're going to discuss before you finalize what you put on your offer, especially if it is competitive. There's likely a chance that someone is committed to this specific house that we're looking at, where we have to make considerations for whether we have one, all three. Usually that doesn't happen, or none. And this will be a pretty detailed conversation that we'll have before we actually formalize a strategy. Fourth is a love letter, which has been very controversial because love letters sometimes affect sellers' decisions to decide working with a client because of, hopefully nothing that comes down to discrimination. So love letters at this very moment is a strategy we used to employ, we still kind of employ, but sellers have to be very careful about the way that they pick an offer over another. Usually it has to be factual based on the metrics, based on the terms of the offer. So this is something that we can talk about in more detail at a later time as well. Purchase price and down payment. How do we know what to offer? It's going to come down to multiple things. Every property is going to be very different. We had a question from someone that asked, what's the variance between list price to offer price? It's going to vary across the board. For example, in San Francisco, people list low and sell high, and that's been a trend. In different places, as you come down to Peninsula or in East Bay, there's going to be different agents employing different strategies. One of the key questions as your agent that we'll ask as we build rapport with the listing agent is, we're going to ask them, how did you formalize the list price? We're also going to ask them, how attractive or how busy has your property been? These will give us indication, and we're going to also understand how many disclosures people have received and requested, and all of that packaged with, what are the material defects of the home? Is there anything that's major that's concerning that we should be aware of? And we put that all together, and we're going to give you at least a recommendation based on what we see in the marketplace. Ultimately, as a consumer, as a buyer, you're going to make the final decision on what you're most comfortable with. What we've seen, though, is sometimes it might take the first try and you get your offer accepted. Sometimes it might take a couple as you learn the process and the market and how competitive that specific neighborhood you're looking in is. For example, if we're writing our first offer for a property that we know is likely going to receive multiple offers, and we're going up against someone that has lost 3 offers in that same neighborhood, they likely have some data that we don't on what the last 3 they offered on and why they lost and what it went for, where maybe they get to the point where they're a little bit more eager to get their offer accepted because they anticipate they need the space. So sometimes, depending on how the competition has been looking in that specific neighborhood, and might have data that we could also find out from the pendings, that's going to be delivered to you so you can make a really good educated decision on what to offer. Down payment, we kind of talked about what we can show and what might be asked of us. Pre-approval, we talked about that. Proof of funds, we talked about that as well. Assad is going to give us some idea on the terms for appraisal contingency and loan contingency that we'll put on the purchase agreement. And that's going to be a guide for us to have a conversation, depending on how competitive it is for this specific property, whether we should elect to have those contingencies or not. Okay, so let's talk about contingencies. Financing contingency is basically something that you'll put in place. Assad might say it's going to take 15 days once we get our offer accepted to go through the conditional approval process and give us the thumbs up at day 10, day 12, day 15. Assad's very diligent in what he does. And from our experience, many lenders may overpromise and underdeliver. So working with a lender that is really good and knowledgeable is one thing, but also has great relationships with their underwriting team is another. And also understanding the market and the process is also very important. And also, does the upfront vetting gathering all the documentation, but also really getting a good understanding of who you are and your financial background, you need a lender that will do all of that. And sometimes when we inherit a lender from a buyer that's been writing offers and been failing or hasn't gotten the service that they need, but they already have a pre-approval, we always want to also have a conversation with your lender, if it's not Assad, to make sure that they're diligent and they're responsive, and all those things are check marks for us to be able to feel confident about the financing. If you're confident about the financing, if you've gotten an underwritten approval, it's more likely that you could feel confident about a potential non-contingent upon financing. If the lender says thumbs up, the file is very clean. Now, it doesn't mean that it's a guarantee that your offer is not going to go through maybe some hurdles along the process, but from the outlook and from just experience, that might give you some confidence to be able to offer something that's non-contingent upon financing. Appraisal contingency. As Assad has previously mentioned, based on the files that he's recently closed throughout the past couple of months, even with COVID and with the uptick in activity and multiple offer scenarios, we just don't know if we get an appraisal that's not local, and sometimes they're not aware of the market. But more often than not, I would say on average, there's two types of appraisals. For this sake, it's a purchase appraisal. The appraiser knows there's a target price they're going for. And most appraisers, which is part of our role as an agent, we want to accommodate them at the property when they do their appraisal walkthrough, because we want to support the data if it is there. If it's not, we want to give them information on how competitive it was, to make sure that that is not an issue once we are in escrow and they appraise the property. So whether you have an appraisal contingency or not, what it means is you have a contingency plan for if an appraisal comes in short. So let's say we write an offer at 1.2, the appraisal comes back at 1.18. That doesn't mean the lender doesn't give you the loan. They'll give you the loan based on the loan to value of 1.18 instead of the purchase price of 1.2, and you'll have to cover the difference of the $20,000 of the gap. Now, first is appraisals may or may not be an issue based on what we're seeing. Secondly is that's why having a little bit more reserve is going to be important. But also I want to give you the other perspective. If you are a seller and you have multiple offers to review on the table, if there's 3 offers and 3 of the 3, 2 of them only have a loan contingency, another one has a loan and appraisal, you as a seller will see that as a little riskier because the buyer has elected to have an additional contingency. So there's 2 things that we're balancing here, because I know it was one of the questions we received. How can we make sure we protect your earnest money deposit, that 3% that we're going to deposit? But at the same time, how can we make sure we look very attractive for the seller to pick our offer? And that's going to be a balancing act depending on property and depending on your financial circumstance. And most importantly, how much you love the home that we're looking at. That's going to play into what we do in terms of the terms. And last is going to be an inspection contingency. Very commonly in our area, the sellers will provide home and termite inspections for a single family. Sometimes it's going to talk about the roof as well, if it's a condo or a townhome. And sometimes we don't have to worry about the exterior of the property because the HOA does. We will also, that one will have a home inspection. We'll review that together if it's provided up front by a reputable company. More often than not, buyers may elect to forego an inspection contingency if all the inspections are provided up front. And the other disclosures, transfer disclosure, seller property questionnaire, any sort of updates that the homeowner has done and they give us an additional disclosure on, should give us the confidence that we could move forward on a property that might not have any major issues. The other thing to note as well, let's say we target a townhouse or a condo. We will also, as your agent, look into the specifics of the reserves, look into the specifics of the rules, because the last thing we want is you buying into a complex that's really horribly managed and you receive some sort of assessment that's demanding you on top of your mortgage payment, on top of your HOA dues, a flat fee to fix the roof of the HOA building. That's the last thing we want. Of course, we're going to look into the disclosures, hundreds of pages each HOA package has, to make sure we look into it, to vet it, to make sure that you're making a safer investment. So those are the three contingencies. Hopefully that clarifies, depending on the property and the circumstance, having one, two, three, or none will be a discussion that we'll have with you and your agent. The love letter. This is something we still feel we definitely provide for any offer and its accompanying. Usually we have some photos and just a little bit about yourself. Just like you falling in love with a home, you know, a seller has enjoyed their home if they've lived there for some time, which most people are selling occupied or at one point occupied the home or grew up in the home. They inherited it and it's now in trust and they're selling it. It's always an emotional decision, just like it is for us. So we will provide it. We'll let the seller and the listing agent do their vetting, but sometimes we see this come into play as reasoning or make an effect on someone making a decision to accept or reject an offer. So even a business deal, right? If Bill Gates is making a business deal and he's shaking hand when he could post COVID, he's still making the determination, do I feel comfortable selling or doing business with this individual, as much as it is a business transaction as well. So that's why this is still very important for us. Tips on how to write a love letter. We'll definitely review this as we get closer to the offer writing process, and we'll probably send you some tips as we get into a working relationship with you. Agent relationship and rapport. This is very important in this market because most agents know each other. It's a very small community. And how does that affect you? For example, I was talking to a good buddy of mine that services the San Bruno market. He reviewed offers right before I reviewed ours on Tuesday. And he gave me data on how many offers he received, around what price they went pending for. And we could utilize that for your benefit as you draft yours on another property. So the data that we look at, sometimes comparables, is 30 days or more old. It's not going to be helpful when we know the pendings are at a different price and also the terms of the pendings are different from what already has closed. So usually we have the ability to get this information with our agents actively writing offers and sharing the information, but also in the marketplace, having a good reputation as an agent matters too, because people will trust you with the information they share. Also, we're very strategic because we want to make a listing agent look and feel good. So if our offer and we make it easy for them to communicate with their seller on why it makes sense to accept our offer and make their life easier to convey information, that usually helps our cause as well. Reciprocity is also very important, making sure that if we have something in the pipeline and they have a client that's super motivated and it still makes sense for the seller, later down the line as they have a listing, we can leverage that to encourage them to entertain and present our offer, obviously, if we submit one to the seller. And functionary versus fiduciary. There's going to be a lot of agents that you could encounter in the marketplace that are a little newer and they're not sure exactly what to do when it comes to offers. They'll literally take your order, but just like that high-end restaurant, they're not going to make the suggestions based on your dietary restrictions and not tell you that if you're allergic to seafood, you shouldn't order this dish, and all of a sudden you have an allergic reaction. We are truly fiduciaries. We will learn very specifically exactly what it is that's a part of your offer and how to present it, so we can make sure we can strategize a higher probability to get your offer accepted. Opportunity. Cool. And we kind of discussed negotiations and the contract, but Wesley, share with us some of the most recent experiences you've had in the marketplace.
Yeah, so actually just, what was it, yesterday, I was able to help a buyer get into contract for a condo in Emeryville. And so the process leading up to the actual offer deadline, we had an offer deadline set for that property. You know, we conveyed the message to the buyers. We put our heads together the night before, discussed and strategized as far as pricing, terms, contingencies, packaged everything up, come offer deadline, we submitted it before then. And there are a couple ways that this could happen as far as negotiations, which could take about 1 to 2 days. But the options that we'll typically see is it's either an acceptance, best case scenario, rejection, or worst case scenario, as well as the counter offer situation. Now, the counter offer situation, there's a couple ways that it can go about. It could be a single counter where you are the only party in negotiation, the only buyer in negotiations, or it could be a multiple offer situation. Now, if it's a multiple counter situation, there could be anywhere from 2 or more other buyers that are in negotiations with these sellers as well. Now, the one thing that we can never guarantee is whether we get to that counter offer situation. So this is the point where we want to make sure that you guys as buyers are fully educated on each property, that we are very confident in the initial offer that we submit, because there may never be that second chance. This is why we always suggest putting our best foot forward. You know, in this competitive market, we may be seeing 5 offers, 10 competing offers, and we just don't know where the other buyers put their value for this property. So for us, we want to, 1, find out what ours is, and 2, make sure to package it in the best light possible. Next slide. And one more, sorry. All right, so let's say best case scenario, we get our offer accepted. What is this going to look like for the next typically 30 days? Now, the reason I say 30 days is because that is the industry standard for the actual escrow period. Now, you may be wondering what this process looks like, what these 30 days looks like. And essentially, this is the time that Assad or your lender, whoever it may be, is going to be the one to kind of make sure to cross all the, dot all his I's and cross all his T's to make sure that your loan is fully qualified, fully approved. And this is the period that the appraisal happens. You've heard us talk about the appraisal all evening. And this is where, for our team, our agents actually like to go meet the appraiser at the property during this point. And the reason we want to be there for this appointment is because it's very important for you guys. We want to make sure that the offer that we wrote at the price that we suggested is a fair market value. The last thing that we want is to be in a situation where we may have had to overbid for the property and the appraiser comes out and says, hey, this property is not actually worth this much. And that might put a little bit of a financial strain on you. So our agents do like to be there for this. And what we typically do is bring comparable sales, have a conversation with the appraiser as far as where we generated this value of ours. And, you know, I think most of us can speak on this and say, hey, we have not been in a situation where we would have to make up a difference of X amount of cash because we overbid it on a property when it really wasn't worth that much. But this is the point where the appraisal happens. But really, the most legwork done during the escrow process is actually done by Assad, who's here with us today. And so what we will do is a few days before we actually close towards the end of this 30-day process is we're going to do a final walkthrough. We're going to want to make sure that the property is in the same condition as when we first toured it. You know, there may be instances where we only get to tour a property one time before submitting an offer. And we want to make sure that, 1, any other buyers that toured that property after us didn't make a mess. And 2, if the owners or the stagers moved out, they did not damage the property. And that is the purpose of this final walkthrough, of making sure that the condition is just as good as when you first toured it. And if everything looks good, we're going to meet there on the final day of the escrow process to hand you guys the keys to your new home. And that is going to be the biggest milestone for us because ultimately, you guys joining us today, starting your next steps, whether it's getting pre-approved, whether it's searching for a home, the whole reason we're doing any of this is to help you guys achieve your end goal of purchasing your first, second, or investment property. Cool. On to who's next.
Here's some predictions, just quickly, because I want to be respectful of time. It's 6:29, and we'll definitely field some questions if there's any. Will continue to be a strong seller's market. Specific commercial sectors might be lagging behind. Residential is really strong because we're spending more time at home on our phones, more screen time, and that's why you see all these tech companies flourish. One really interesting perspective is there is a correlation between Apple's stock price and our housing market here. So that's something for you to consider and take a look at. And yeah, there we go. Just different industries and how they're affected. And these are some predictions that CBRE has come up with. Let's talk about some success stories, but maybe even before this, if anyone has any specific questions, you can feel free to just share on chat, or you can unmute and be more than happy to cover it. And then I think some of the success stories might be able to be helpful in terms of understanding the process a little bit more in depth, because it's actual things that have happened. So, but yeah, maybe we'll start with success stories, and if questions come in, we'll definitely field them. Maybe Ashley, Wesley, have some things that you could share.
Sure. Some of the recent wins, there's a photo here of a young man. He was 19 years old. He came to one of our listings, and I met him and his parents. He, as Assad mentioned, he didn't have really any credit. He was so young. So his parents were helping out. So the way we were able to negotiate it through was we gave him, I think the escrow process, we ended up doing close to 2 months so that he could get enough time to sort like the bank to figure out a way to finance him for a loan. He actually had saved up a lot for a down payment, but that was a huge accomplishment for someone at that young of an age to already start building wealth through real estate. So he purchased a condo in South City. And so that was super cool. On that same day, the clients right next to him helped them move into a beautiful home. And they had an interesting situation, which some of you will run into, is referred to as rent back. So the sellers needed time after escrow. They needed the funds from the sale of the home to move and get their next home. So we're able to negotiate that through the offers, that our buyers didn't have to come in at a higher price point because they were willing to accommodate that seller's request. So we were able to kind of calculate that price point of the seller staying into our offer and still get the win. So that was some recent ones here.
Yeah, I can share one story that I have. Recently, I was helping a couple of friends of mine look for a home in the East Bay. We had been touring homes every weekend pretty much for, I would say, at least a month straight. Now, what was interesting was the very first property that we actually toured was something that they really liked, but the actual pre-approval that they were getting with Assad hadn't been completed at the time because they were still missing some documentation that they needed to submit themselves. And by the time we got that pre-approval ready, that home had actually gone into contract and received an offer that they liked and accepted it. And we had toured some other properties, wrote a couple offers. And oddly enough, that property and that transaction actually fell through. So the property itself came back on market on, I believe, on a Wednesday. We went over on a Friday, and they had set the offer deadline for the following week. But just the conversations that I had with the listing agent throughout the process leading up to our initial tour told us that appointments were getting booked quickly. People were reviewing disclosures as soon as they could. And some of the agents were kind of hovering around asking questions about the property. So, we explored and had a conversation with a listing agent to see if a preemptive offer would have made sense, if the sellers would even be open to it at this point. And ultimately, we decided, me and the buyers, that, hey, you know what? This is an opportunity that we might not get. It was the first property we ever toured and the first property they really fell in love with. So we decided, hey, you know what? Let's just do it. Listing agent gave us the green light and said, if you want to submit something early, it's got to, make sense, but send it over. And turns out by the time we toured it Friday, we had the conversation Friday night, we were prepping it on Saturday to be submitted that same day. They had already received 2 to 3 other preemptive offers. And keep in mind, this property is only back on the market for maybe 3 or 4 days. So it's a really short turnaround. But ultimately, we were able to have our offer accepted. We beat out 3 other preemptive offers before the weekend, the first weekend of back on market tours finished through. So this was a huge win for them. They're super excited. We're set to close in a couple of weeks. And really what it came down to was having a good relationship and building rapport with that listing agent to know, one, what the sellers were looking for in their offer, two, just that open line of communication to show that the buyers were serious about it, that they missed out that first time, saw this as a second opportunity and did not want to let it go. So this is part of the reason why Wilson was talking about building rapport with the listing agent, as well as doing your research as far as comparable sales, things about the neighborhood, average price points, and all that kind of stuff. Because when it comes time to actually submit an offer, we don't always have a lot of time to work with. So doing a lot of this beforehand, or as we continue and step by step, whether it's looking at disclosures, touring properties, being in the know and having this relationship with the listing agent is huge for us.
Yeah. I'll share 3 quick stories. There was a client that we met 5 years ago that we had a sit down meeting for a buyer consultation. And at that meeting, we figured out that they weren't quite financially ready to purchase. Speed up 5 years, they were able to qualify for a bridge loan, and they were able to purchase first in Pacifica, move in. We did some renovations, help them sell for a higher price their townhouse in South City, and they set a record price for that property, paid off their bridge loan, and they're just super happy. We actually, myself and our videographers had met them at their property with Ellie, who's not able to share the story because she's not here today, but that's definitely a big win. Another 2 big wins is my own purchase, because I knew the listing agent, he had shared with me what was coming up after I did a quick tour of another property he had. And because he had shared it, because he knew I was interested for a period of time, which regardless if it's me or for a client, because of that relationship, he entertained and he was more inclined and more eager to show and share our offer and present it in a positive light to the consumer, the seller. And then another one is actually Amy on the team. And because we knew that the property was a relist, it failed to sell the first time, and we kind of had a good idea from the seller. I was there at the walkthrough, and he was sitting in the backyard, and I just had a little chit chat with him, and he shared with me exactly what happened the first time around, which gave me data on how much offers came in at the first time. So utilizing that data, and we drafted the offer. The agent didn't know I had a very in-depth conversation with the seller, but that's even more reason if you ever decide to sell a home, you should not be there during tours, because you don't want to talk to a buyer agent like myself or anyone on this call, because we're going to sound very nice and we're going to get information from you to use for the benefit of, in this case, it would be you, the buyer, to benefit us in making sure we get our offer accepted. But those are just some things I wanted to share with you and highlight, because as competitive as it is, sometimes discouraging, sometimes it takes multiple tries, but it's still happening. And honestly, it's such a worthy goal to be able to find a place and to call it home and to be able to provide that to your family. So those are the success stories, at least, that definitely come to mind. I'm sure Assad has many, but he's looking at so many files. Next slide, please. And yeah, feel free to reach out to us. A bunch of agents on the team that we all share information in terms of what we're experiencing in the marketplace. And then just want to say thank you. If you thought this was helpful, just send us a note or give us feedback or type in chat. Either way, we're here to help. Just like that client we met 5 years ago personally, it doesn't matter if you're ready now, later, or you decide never, even after a conversation with us. We just want to make sure that we're giving you appropriate information so you can make the best decision for you and your family, whether you buy here, you buy out of state, whatever that looks like. So I just want to say thank you for your time, everyone that showed up. Thank you, Assad. Thank you, every single one of our team members. Hopefully this has been helpful. We're going to post a recording of this on YouTube, and we'll share the link just in case you want to revisit anything. Thank you so much, guys.